Welcome to FT Markets for the traditional post-ECB conference analysis. Speaking with me today is Ralph Atkins, the FT's capital market editor. Now, in a gorgeous Nicosia, lots of questions about Greece, but really the big news is about QE, which is starting on Monday.
Absolutely. We're hoping for some more details about actually how they're going to implement the program. What we do know is they're going to start on Monday. They're going to be fairly flexible in how they go about it, but Mr. Draghi talked about being the determined implementation of his 60 billion a month purchases.
Now, if we go to your first chart, we see that some of the effects of QE have already happened with Italian and Spanish 10-year bond yields coming down really sharply over the last few months.
They have come down quite a lot already this year in anticipation of them starting, and actually since the press conference they've come down a little bit further. The big question now is, of course, whether they start going back up again on expectations of higher inflation and higher growth. One interesting detail from the press conference we got today was that Draghi said they will not buy anything that's yielding less than minus 0.2%, which is where they have the interest rate on their deposit facility. Of course, 10-year Italian and Spanish bonds are still very low, but nowhere near that level. But some bonds, including 2-year German bonds, are actually below that level. So there is some limit to how much they're going to pay for bonds.
Now, the other big news today was about the ECB's own forecasts on where they see inflation, and they've downgraded the revision for this year down to zero inflation, but they're very bullish about 2016. They expect 1.5%. That's a jump of 1.5 percentage points.
Yeah, they're expecting that their program is going to work, that it's going to boost inflation considerably, almost, and back by 2017, back to within the below but close to 2% target. And as you can see, what we've plotted here is this is what markets are pricing in for inflation, 5-year inflation rate over 5 years, starting in 5 years. And what we've seen even today is quite a sharp jump back up in what markets are expecting inflation rates to be. So sounds for now, as you say, the sun is shining on Mr. Draghi.
But now the other question is about growth, which is what certainly governments and lots of voters in the Eurozone want to return, and also an upward revision. But a lot of it will depend on your next chart, which is what happens to the euro. Will the sharp depreciation against the dollar, which we're seeing, boost exports and really help to drive growth?
And Mr. Draghi argued it is already, and that explained the more optimistic forecast, along with, of course, a lower oil price and also the effects of QE as well. He sees as boosting the Eurozone economy, getting back to sort of 2% growth by 27, which would be quite strong by Eurozone standards.
So in a way, the ECB really sees the Japan scenario as avoided at the moment because QE will work.
Absolutely. Mr. Draghi, very confident today, has to be really, if QE is going to work.
Well, Ralph, thank you very much for being with us today. Mr. Draghi is certainly very confident that QE is going to work. Only time will tell whether he's indeed right.